What is going on, traders? I'm Antoine Farrar. Welcome to another trading session with Digital Goatz Academy, and welcome to our weekly review. As you know, if you've been following me, I just give basically an analysis or a recap of what the market did over this past week. So, a lot of opportunities and everything that we've been projecting has been playing out. Actually, this prior week was a little bit more spot on than our previous week. So, good week. I hope everybody had the ability to take advantage of some of these trades before the market like pulled back some a little bit. But obviously, if you've been tuning into my channel, you know I discuss indices because I believe that's where the money is at when it comes to foreign exchange trading, not to mention, long-term investing. So I primarily focus on that. I do discuss some other Forex pairs, but to be honest, especially with the market creating new highs, like I think that I'm gonna stick to indices. But I do have team members that I'm going to be introducing as educators to Digital Goats. So they specifically go over other Forex pairs that, traders might be used to trading if they're not already accustomed to trading indices. So just wanted to push that out there. But yeah, let's just talk about what the week did. Obviously, we want to go Sunday to Sunday. Today is Sunday right now, and we're waiting for the market to open. I'm on the East Coast, so it is 2:48 p.m. Eastern time, almost 3 o'clock. So the market opens up at 5, but indices they don't start opening up until 6 p.m. Eastern time. So we're just basically gonna outline, like I said, what the market did in the previous week. And if you want to catch what my prediction is or basically my analysis, you'll have to catch me on the market forecast, which I normally do Tuesdays. I either drop that out at midnight or I drop it out the next day. So just tune into that if you want to take advantage of that on YouTube. But anyway, where's Sunday at? Was this Sunday? No, that was a gap on Wednesday. Is this where we came from? Last Sunday was the 25th. Hold on. Also, let me get this up out of here. Sunday was the 23rd. Oh, okay. So, okay. Wait, no, Sunday was the 24th. My bad. Yeah, Sunday was the 24th. Okay. I'm tripping. Man, all this happened on the hour time frame. It's because I wasn't paying attention to S&P. So I apologize for the delay. That's why I was confused because I really wasn't paying attention to S&P, even though I did end up charting it up on like I think Tuesday or Wednesday. But anyway, this is basically what happened in the market. Again, we want to start from where the market is currently at and then snake our way back to see how the market responded. That information plays a part in the future, if it becomes relevant. So, it's just a form of back testing. So looking at it, obviously we see that the market did break higher than last week. I mean, the previous week. So the previous week was with Jerome Powell, right? Jerome Powell had that conference at Jackson Hole, Wyoming, and the market was already bullish before he even started talking. Once he started talking, that just was the trigger that we needed, that we always discuss, the trigger that we needed in order the market to go in the direction it was going to go anyway. And then obviously, it has to correct itself, right? So the market brought itself. If you draw a fib from like the high into the low of that move, of that bullish move right here, you can see that the market came within 382, 38% of this entire move, right? And against this candle, let's see, 618. So two primary zones that we would like to see based off of how you're like using the fib tool, but obviously you want to use it in its entirety as far as like the entire move, because that's going to be the best way it serves you versus just doing a candle. I use candles to figure out where it might pull back at or at what percentage like is 50 or 618. So it really came as low as 786. But the structure closed at 618, which again, I think I discussed this where I was like, that's a double bottom. The market pushes up. Yeah, I'm pretty sure I discussed this on market forecast because this information, we already had this information by the time Tuesday came. Yeah, because I do it at 5 o'clock. So yeah, by the time Tuesday came, we had all this information. And as you can see, what did the market do after it broke out of Wednesday, right? It tests these areas that it broke out of, right? I even mentioned that. I said that, and you can look at the look at the why am I struggling? Look at the last YouTube video that I pushed out, and I mentioned the possibility of the market coming down to this low. You see it really respond to this gap right here. Purple indicates a gap. Unless I, annotate it differently, but purple normally indicates gaps in the market that I highlight. So you can see a return to this gap. That makes sense. It left the wick there. What do I always talk about wicks? We would like to see a candle close on the opposite side to confirm that. So even though it produced a wick, and yeah, sometimes you have structure that'll be higher, but again, we still would like to see that. Again, I wasn't paying attention to S&P, so a lot of this stuff is actually new to me as far as seeing this data. So I actually didn't know that it tests down here at this time. I saw this area, but I wasn't really paying attention. I ended up drawing this information a little bit later on as well because I boxed this zone up. I did box this information up, broke out of here, and then it tests all the way back to the gap to confirm that we are in fact buying up. Now, I don't want to go into like my projections, but I would guess that the market is still pushing up even over the weekend, or you might like have a gap up, which means that the market should pull away from there. And then that's an opportunity for us to re-enter when the market decides to test that area again. If you're going to just, unless you're the type to wait for the pullback. So sometimes that doesn't work in indices because that market goes. But again, as the beginning of the week, you do want to be a little bit more patient to wait for the pullbacks and not always try to get the initial moves. Like wait for the information to wait for the data to form, and then and then you have your position when the market comes back, right? So if it does gap up, I don't think like it's going to be like a major gap, just a gap to show continuation from this zone. And then obviously we'll play around this area, if not trying to create support off of this gap. I don't think that we're coming down. I just think that between this zone and this gap is where we're looking for the market to truly break up out of it for indices. I mean, for S&P before we can consider another buy option, because again, it could start ranging from here. So you can see that we still broken structure. And again, look on the weekly, I mean, look on the higher time frames, like the daily, the weekly. One thing we can see is that, well, one, we're going into a new month. So that's good information right there. We're going into a new month. The only thing, like I said, so that kind of opens the possibility of the market trying to gap down, but we don't know. If it opens up as a new month and it's a straight bull candle, like we have to respect it as such. So because we are looking for the market still to remain bullish, no matter if the open of this month candle like pushes down, I still think that we're still buying up once it tests like the certain areas that it wants to respect that, right? Yeah, I'm definitely looking for like a major push, but we have to get out of this range. So I don't know if it wants to range over here, which I'm hoping it doesn't. I'm hoping that our next daily candle obviously will open right here and then force us to be higher. Again, it might push down just a little bit, but it should want to break this area at 6504. Once we tapped that zone, I knew that we were breaking like levels. So that 7,000, that 7K mark that analysts were talking about, that we were talking about at the beginning of the year, it's happening. You know what I'm saying? Like we're closer than we are farther away. So you just have to respect that this thing is probably by the end of the year coming up to 7K, which means that the next rate hike, I mean, not rate hike, the next possible rate cut decision or Fed rate decision is going to be in December. To me, I think that would be appropriate if the market started getting aggressively bullish. I think that would be appropriate for the market to start, well, the Fed to step in and say, yeah, we definitely need a rate cut now, and then bring the market down to some of these lower areas that the market broke out of. But I can at least see us going to maybe not 7K before the end of the year, but like 68. 67, but I did say something about US 30 the other day that it surprised me. So, I mean, we'll see. But after that move, you definitely would need a rate cut. So, if we do touch 7K or a little bit shy under that, then the market will probably reverse towards December. And we're probably looking at sales the beginning of the year until we get to like, I don't know, April, May. Um, we just got to pay attention to that data as it's forming. But again, I already said we're the new kids on the block for the next generation when it comes to traders. So we have to gather this data and make sense of it, record it, and make sense of it for the next generation. But this is now about to be new territory. So we'll really see who knows how to fucking trade. Excuse my French. You know what I'm saying? But anyway, let's go to US 30. So that's basically what the market did. What we're waiting for is for the market to break these highs or at least give us enough data to say that, okay, we can buy again um, on the lower time frames, like once the higher time frame data forms. But the market has been playing to these patterns that we've been looking at. So specifically US 30, as you already saw, S&P is playing to the pattern we identified. We called this I think we said last week we believed that, yo, this is a bullish flag, and this is when Joe Biden was talking. So it played exactly how we wanted to see. We didn't know, but again, this is what we identified the possibility of the market doing. I think this is a bullish flag. And then the market pushed all the way back down to the gap and respecting the trend line that I drew. This trend line is still imaginary. I'm basically making it up as we get more data, but I'm just stretching it, you know what I'm saying? And I started from this point because this was the last point of support that we had for the market to start buying up. And all I'm doing is just identifying structure or basically patterns that I've been taught. You know what I'm saying? Bullish flag, it ain't hard to try to fucking see this stuff. It's just thinking that you see it and then how the market reacts. You know what I'm saying? Don't try to force what it is. You know what I'm saying? See that I think this is what it is. I'm gonna see how the market reacts. Obviously, I was in this, but because I was banking on it to react that way. You know what I'm saying? And again, even on a smaller time frame, as more data is presented in the market, you're gonna be able to see these moves before it happen. I saw this move. I mean, if we have I think I have the YouTube video out there where it's like I talked about this, and if I don't have it on YouTube, I know I have it in my Discord community where I discussed this. We already saw that the market was bullish before Jerome Powell was talking that day. You know what I'm saying? So the only surprise is how bullish it got. But make no mistake, we knew that it was going to be bullish. We just didn't know how bullish it was going to be. So again, like it doesn't take like too much to figure out how the market is going to respond. And the technicals tell the story ahead of the time before the fundamentals. So if you're out here just relying solely on fundamentals, you're playing yourself because the information is in the technicals, yo. It's in the charts. You know what I'm saying? That's how you fucking read this story, yo. You identify what's in the charts and then you make sense of it and you say based off of what you learn and also what based off of what you're learning, I'm still learning as a trader. You know what I'm saying? Trying to study how the market responds. And I can only go off the last information they gave me to try to deduce that it might react this way. I mean, we're a little bit more right than we're not. You know what I'm saying? But at the same time, it's still, it's market structure. Like it's not rocket science. You know what I mean? So sorry for going on a little bit of a tangent. But again, last week we identified this. Last week we killed it with US 30. Sniper entry, yo. And again, you could say it's guesstimation, guess the trading. You can say all that. But again, you're just using the information that the technicals provide. This is what happened last week. Well, this is what happened when Jerome Powell talked, right? So I already identified this area. The market triggered based off of this pattern, bullish flag, broke through just like I expected. But guess what? We're not just gonna keep going up like you want us to. You know what I'm saying? We gotta have to have some type of correction. Don't always think of it as like a sell especially if you're in a bullish market. Think of it as a correction. So the market had to correct. So again, let's start from where we're at currently right now. This is Friday's candle. We got to see how Sunday's candle is going to react. We're on the hour time frame. So again, snake your way back. Make sense of what the market did as it gave out more information for us to use, right? And even now, I can still identify more stuff. So again, if you follow my channel and if you're tuning into this channel, make sure you hit that like button, comment, and subscribe. We greatly appreciate that to all our patrons and subscribers out there. But we've been on fucking fire. And you can tell with my lingo. We've been on fire, yo. So if you're not tuning in, I'm gonna be honest, you're playing yourself because this is free information, even if it's not live. Just wait till we start going live. But anyway, let's get back to the segment. So just snake your way back based off the information that you're looking at. Snake your way back. Oh, snap, there was a gap that I didn't identify. So I want to go ahead and identify that. I already saw that, but I didn't care because I can see it with my eyes. I don't really need to. You don't want to get so wrapped up in trying to identify everything that your chart looks like a lightsaber match between the Jedi and the Sith. You feel me? So like, especially you all with those black backgrounds, yo. Like, I think it's clear. The least you have on your charts is the better. But because like I've been trading, for a couple years, like all this information is relevant to me. So it's not a distraction. But I still try to keep my charts as clean as possible. But this is not distracting. And even as I go, like information that's not relevant anymore, I delete it. Like that's not important because price didn't respect that anymore. This stuff is important. So anyway, snake our way back. We see that the market gapped, right? What was that? Thursday? I'm sure that's at 5 p.m. Yes, it is. 5 p.m. close. So of course it did. Gap down, pushed the market down, and then obviously Friday it did its thing. It had PMI data, and there was some other data that came out on Friday that drove the market down to where really it should have been anyway. And these are things that I've already identified that, hey, when you're looking at consolidation, you want two ways for it to happen. And it basically played to what people would expect. But again, it just depends on what type of trader you are. Like I'm an intraday to swing trader, so like I'm looking to hold US 30 for like a day or two. I actually got out of this. I could have taken this I could have stayed in this position possibly, but I don't like swap fees if I'm not in a lot of profit. So I entered here and obviously the market drove down and I had to wait. And this move ended up being towards like when the market was about to reset. So I just ended up closing out my little bit of profit because it wasn't worth trying to take the swap fee. You know what I'm saying? You got to be your own accountant when it comes to trading. So I hope everybody pays attention to like how much money is coming out of their balance when they are entering these trades, or how much or their margin when you are entering these trades. But anyway, this is consolidation. It works one or two ways if price is respecting this, right? So if it's buying up, you either needed to test the high, which it basically manipulated. It drew people in. It tested the high right there. It rejected an area we've already identified anyway. We identified this as resistance. So it's like, no duh. We don't know if it's going to break, but it was playing to basically that data that was released on Friday. So it wasn't ready to break out of this area, but I think we'll get our break. I think we'll get our break this week. But again, this ain't market forecast. So let's just stick to identifying what happened. Gap down, pushed up. This broke from consolidation. So this consolidation area was made on Wednesday. I think it took the whole day for the market to do this. That was kind of crazy. Yeah, I think it took almost the whole day. No, yesterday, Tuesday, I mean, not yesterday, Tuesday going into Wednesday. And then even then, it was still like Wednesday was still, yeah, man. Like Wednesday to Thursday, you had opportunity, but to be honest, I think US 30 was kind of like the better play. So it was playing the fence on both ends. You could have been right in either direction if you were selling or buying from these positions. You know what I'm saying? You had definitely like after it bought up, you had a lot more selling opportunity. than the buys, but that's kind of like how the buys work. I think they were trapping sellers, but also trapping buyers by creating these sell points. If you bought like here, you probably got pushed down. You bought here, you got pushed down. You see what I'm saying? It was trapping on both ends, which, is based off of this pattern. Like, we're still playing to what we want to see. So it is still bullish. And then again, when we came from this consolidation, look what we already had annotated. We had a buy entry right here. I didn't know that the market was going to create a sniper entry off this shit, but this was data that I think I talked about on the market forecast where there was a gap there. And even if you didn't know there was a gap there, the candles formation just looks kind of crazy. Doesn't look normal, you know what I'm saying? So even if you still didn't know how to identify a gap, you would still look at this market and be like, why is this candle forming like that? Why did the open not open here since it really closed? Because how the market should work is that where the previous candle closed, the next candle should open. And you see that by back testing. Look at all these formations of the candles where the market closed and then the candle opened right next to where it closed at. They didn't have that much space. So even if you didn't know that was a gap, you should have been able to be like, that sticks out. That's how I started spotting it. I was like, why did that candle do that? Like, why? I didn't know what gaps were. Or I didn't know how to identify gaps, or I didn't pay attention to that stuff. But when I used to see this, I used to call it broken candles. Like, why does a candle look broken? And it made me investigate it, which was like, oh, okay. When the market does that, I've noticed that the market does come back to those areas. I don't know why. I know that's missing money. That's what I know for sure. So the market pretty much came back to the area where Jerome Powell started talking. You know what I'm saying? Man, it's not gonna let me. Oh, it did it. There we go. But it basically came back to the area where Jerome Powell started talking. This was the 10 a.m. candle. We had a buy entry right here. This was basically the sniper entry. So even if you took it here or you took it here, you still had a sniper entry um, within US 30. And I think I left that. I think I left that for people to be able to take advantage of that. So I mean, that was like that's free money, yeah. And let's see how big that move was if you were patient. Now, I tend to get out. I don't like being in consolidation because I just don't know. So, each move that it pushed up, I got out. You know what I'm saying? It was like $30, $40, $100. Like, I got out. You know what I'm saying? I wasn't trying to hold these trades like too aggressive. And especially like by the time it got to resistance and I recognized that, got out and tried to enter lower. I actually did enter in a lower position up here and it pushed me back up here. I was forced to get out, then it dropped lower, got in another position, and then, took that profit. So I am in still like two positions that like have smaller lot sizes because I trade minis as well, just to kind of not miss out that money that the market may possibly give out. But we'll see. I'm kind of gauging how the market is going to react based off of those positions, and then I'll enter in US 30 Pro again, like how I really want to. But the fact that if it gaps over a gap, then it's like, man, it might push up and then want to come back here after it breaks the high. Like, we just got to pay attention. But just look how the market responded. One, we do have support structure right here, and that's based off of this consolidation pattern. So the only thing that's left to do, besides once we clear this gap, that's probably going to be if it gaps down, then perfect. But if it gaps up, then it's like, we're gonna have to see how this market is gonna be designed to fight. If it claims that gap, we just have to make sure it doesn't try to test that gap again. So if this is the type of gap where there's a difference when I make like circles versus like zones for gaps and stuff. So this will probably be, if it does gap up, I'll probably have to make a zone gap and see how often the market will try to position itself to test this area, just like we saw with S&P before it decides to push up. So US 30 is a little bit forward, like straightforward with that. So even if it does gap and it wants to test that gap, it should only, you see how I kind of did it over here, like it shouldn't want to stay there, you know what I'm saying, and be trying to make big moves before it tests it. It should test it like as a basic like move of structure and then kind of play within that zone, if that makes sense. So it should break the high and then want to test that zone just to confirm it and then buy back up from there. So basically, this gap area could be the buy zone once the market breaks up out of here, and then if it decides to return there. You see what I'm saying? But that's all I got for you traders. I hope that helps. I'm definitely looking forward to a great week this week in the market. I hope everybody is too. But just pay attention to the data. You know what I'm saying? Like, don't get so wrapped up in listening to like the fundamentals and triggering fear in your own analysis that you either get scared out of your own trade or close your profit too early, or God forbid you take a L. You know what I'm saying? Just because like you're not just paying attention to the data, you're relying too much on these big wigs and their conversation pieces. They play a part, make no mistake. They do play a part, and you do need that data. But if somebody just only went off of technicals, I think they still could be a successful trader. You know what I mean? You just want to hone in on other things. But I'll catch everybody on our next video with Digital Goatz Academy. I'm Antoine Farrar. As always, I hope everybody has a successful trading week, and I'm signing out. Peace.